In this video, we are going to be analysing the Nvidia ticker NVDA. Now, we are down 1.5% on the day. What are we looking at going forward? Now, this pullback is expected. If we put on where we do our standard deviation channels, is where we do our technical analysis. On the left, we have a 6-month chart. On the right, we have a 1-year chart. Well, what are we looking at? Why do we expect this pullback to continue? So, we touched and kind of tested this first deviation on the 1 year. When you hit this level, you expect a pullback. That's to be expected. Now, where do you expect the pullback to occur to? 158. Not only do we expect a pullback because we've hit a new deviation, but we've broken this level. And when you break the level, you expect it to come back, retest it as a support, and if it can hold, that's good confirmation and you expect a move to the upside. So really, there's two reasons for our strategy to basically do as expected. So to me, what I'm looking at on the video is a move back to 158. Again, this is to be an expected move. This is where I would look to take it long bias. Where would I be looking at for stops? Really, I would be having quite a tight stop on this, depending on your risk tolerance or the size you're going in with. My first stop would be around that 154.50, because again, if we break this, we're going to break that low. More likely for more people to maybe flip a bit more bearish, but if we can hold that 158, I'm looking to play it long bias, because again, we have a lot more upside compared to the risk. We can get some good risk to reward. If I had a bit more kind of lenient on the risk, I could have a stop down at around 149. But again, then I'm risking about 8 points on the trade, which is quite a lot, even considering we would have quite a lot of upside. I don't like to take that much risk if I'm taking it with shares. I may be looking at that if I'm going through options, because then you can be a bit more lenient and forge them in a way that you kind of can profit off that. But off shares, that's quite a lot of risk to take on, especially even if you're taking on 100 shares, it's $800 of risk you're taking for, maybe $1,000 upside. The risk to reward there doesn't make too much sense to me, whereas risking $400 to make around $1,000 makes a lot more sense. So that's what I'd be paying attention to. We'll remove those though, because they're not actual strong levels, they're just where I'd be placing my stops and kind of my thought process behind the trade. Now, if we come down to this, we hold it and we start pushing up, again looking for that break. It wouldn't be unlikely to break this level again, come back to test it as a support, and if it holds again, stronger confirmation that we will continue higher. This is where the proper upside will come, because then we're looking at a big move. If we can hold that 170, we then have the closest target of 196 going higher. If we break that, we're then looking at 220, going on to 235, going further at 275, and a final level at 328. So these would be all our upside targets. Quickly cover the downside targets as well. We're looking at 118, 113. Now these are levels we don't tend to trade off, but instead to. Reason for that is it's statistical mean. This is fair value. If you're buying here, unless it's from an investment standpoint, it's not really overvalued or overbought. It's not overbought, oversold. So again, it's going to be harder to pick a direction because there's no kind of mean for it to reverse to. So that's why I wouldn't be buying at that area. But if I was short, that could be a final target. Now, if we break this and continue low, we would have supports at 181, $60, 43, and final ones at basically $5. $5 obviously probably never going to happen, but always better to be prepared. But really, if markets do continue weak, 81 definitely is kind of possible. And what I'd be looking at, $60 might be a bit difficult, but again possible. And 42, don't really see it happening, but again better to be prepared than not. Now these downside targets, probably not something I'm massively focusing on from the trading perspective, but definitely something I'll be loading up on the investment account if it pushed down that low. Really, though, like I said, where we are now, my main kind of trade process or kind of trade ideas is if we come back down to this 158, I'm looking at it long bias. As long as it can kind of hold, by that I mean come down, and I want to see at least kind of one green candle close on the 1 year, and then again pretty tight stop, maybe 4 points of risk, and looking to trade it up to 167. I would move stop to break even, looking at a bit of profits, but really I'm trying to push to that $200 target really. So that is the breakdown on the video. I hope you enjoyed the video. If you did, want to drop a like and subscribe and check out one of these 2 analysis videos.